And also very important, always confirm by looking at volume. Now, volume confirms price action and volume leads price action. Now, just do a little example here. Ignore the top graphs here and just look at the histogram at the bottom here. And by looking at this little circle here, by just looking at the graph, at the histogram, can you tell me, are there more buyers than sellers? You don't know. That's why you combine volume with the price. And I can see price going up, so I must assume there must be more buyers than sellers. Now, here in South Africa, 90% of the trade on the JSE are the institutions, the pension funds, unit trust guys, etc. You and I, as small private investors, have one major advantage over them. We get flexibility. I like to take on the coattails of the institution, but I get flexibility. I can move in and out faster than they can. So when I'm looking at volume, I'm looking at, and this indicator is called on-balance volume. It's a running total of volume. If price goes up, I add the volume. If price falls, I subtract the volume. What's very important here is I use a 10-day moving average, and I want to see a crossover. I want to see a crossover of the moving averages. Over here, that would have been confirmation. We're going from but this is what they call volume distribution. So it's confirming that price action. There's sellers coming to the market. And then obviously, more and more clever money is coming to the bottom here. Remember I spoke to you just now about the clever money? Okay, so this is the clever money coming in the bottom here. And then we have this volume accumulation. And that's what's run here. So volume is a very important confirmation tool. Okay, that's how you use it. So obviously when it's going up, okay, that's volume accumulation, and we have a bit of a sideways market. There hasn't been much of a sell-off, and that's you can see what's happening with the market here. With Anglo's, a bit of a sideways market, slightly higher highs, but you get a bit of a sideways market. So that's looking at volume. And the last thing I always like to do is helping with what they call rate of strength analysis. Rate of strength analysis especially helps in the situation when you've got two different shares and you want to have one in your trading portfolio or one in your investment portfolio. I'm looking at a bank. I'm looking at F&B or First Rand relative to Standard Bank. I want to choose which one's stronger. So rate of strength analysis. Here I'm using Anglo again. That's all it is. It's an indicator that compares one data stream to another data stream. So here I'm looking at Anglo's relative to the whole market, to the JSE All Share. And I use an analogy of a horse race. If you had an opportunity to bet on a horse race, halfway through a horse race, which horses would you like to bet on? Obviously, you want to go for the horses near the front of the race, the potential winners. Some of you might bet on the horses near the middle, but you should not be betting on the donkey at the end of the race because obviously he's got the longest to ride. Okay, so the interpretation of this indicator is when it's falling down, when it's coming back like this, obviously Anglo at that point in time, relative to the whole market, was the donkey. Okay, it was underperforming the market. There were better opportunities somewhere else. When it starts to trend up like that, this point in time, it was outperforming. So this is one of the shares, one of the horses near the front of the race. Okay, when it moves sideways, you're betting on the horses near the middle. Okay, so at this point in time, you can see it's just below its moving averages. That high is lower than this one, so we're slowly getting weaker. So again, you can see the market moving sideways. Might be saying, hey, there's opportunity somewhere else. We've had this little run. Maybe start taking profits. Yes, it's still above its moving averages. The trend is still bullish. So you might say, okay, let me take my profits. I'm roughly down here, 226. Now at 273, I made roughly about 50 Rand a share. Maybe I take my profits as a trader. Okay. Remember, technical analysis is more appropriate for trading, not for investing. You might only use investing from looking at long-term cycles. You might look at your moving averages to help you establish in a bull market or bear market. But technical analysis is ideal for trading. Okay. So guys, I'm running out of time. This is the end of the presentation in the sense that I hope you benefit from it. In a nutshell, I always believe in there's three things you want to look at. Ask yourself, what kind of market are we in? Ideally, you want to be trading a trending market. Either the market's going up or the market's going down. Obviously, you can only take advantage of a falling market using derivatives like single stock futures. Okay, you'll go short. Within that long-term trending market, either up or down, you want to look for take advantage of the cycles. Are we at the top of the cycle? Are we overbought, oversold? And then lastly, you want to go for shares that are outperforming the market. So you want to go long, you want to go for the strong shares. You want to go short, you want to go for the underperforming shares. So in a nutshell, when I look at trending, I use various tools: cycles, support and resistance, trend lines, moving averages. When I look at overbought, oversold, and I've only very quickly touched on it tonight, MACD, but there's RSI, stochastic, and a lot of other indicators you can use. But I suggest that you also use volume. Volume confirms that price action. It's a very important, sensitive indicator in the sense that it leads price action. And then lastly, I like to use relative strength analysis. Okay, guys. So, before we handle any questions, let me quickly summarize it. Technical analysis, remember, is not concerned with the reasons behind the price move. A pure technical analyst doesn't want to know the name of the company. You also understand that there's always a reason why the share price is moving up and down. So, this can be trivial or something more drastic. Okay, we've seen in the last few days what's happening with African Bank. But as a trader, some of you might not agree with it, but I always believe in finding out why. Why is the sentiment forcing the share price down? Okay, I might have missed something. So I always like to find out why. And then obviously the market also overreacts to the top side and the bottom side. And sometimes it might not be justified. And that's where the opportunity lies. Okay, so use common sense and feel where the price is right. And that's why I believe using support and resistance and looking at the market. Okay, let the technical charts tell you where to get in at the market. So yes, we're talking about greed and fear. Those are the two biggest emotions. You need to be objective. Okay, so one point is trying to make for you guys is being aware and find out why, and it will lead you to that buying opportunity. Okay, so the markets are volatile, and sometimes the market behaves like a pendulum. One day we're up, one day we're down. Okay, but sometimes we have excessive moves. We swing too far left and too far right. Okay, so be aware of those kind of market actions. And that's what technical analysis. You need to have this, call it a quiver of arrows. You need to have a lot of tools in your toolbox. Okay, so technical analysis and the charts I've been using as our own little software called WEN, and there's a lot of other tools available out there. They are there to help you identify these events. And obviously from there, you still need to do your homework. Okay, don't just go blindly on the what's happening with the charts. Okay, and always use risk management. I spoke about stop loss. So as a trader, always use risk management, especially when it comes to the stop loss facility. Okay, so guys, but thanks for your time. Thanks for your support. Let me see if there's any questions coming through.